we've got Naresh Mirani joining in. Dipan Mehta as well joins in into the conversation. Naresh, firstly to you, because it's getting a little choppy, still within a range and a narrow band at that. We've had definitely much more volatile a few days. But where is it that you see the Nifty settling in now?
So the first band of resistance for the Nifty was 24,500, 600, which is where the recovery was facing resistance in this whole correction. And we are seeing volatility around that area. That is pretty normal given that we've recovered 1,000 plus points from the lows. On the other side, what we are seeing is a clean breakout happening on the Bank Nifty. Now, Bank Nifty is well above the 52,500, 600 mark, and now we are at 53,000 plus. And out here, we are now just down 2-3% from an all-time high. Clearly, we are seeing good momentum across this heavyweights in the banking space. So you have HDFC Bank at an all-time high. You have ICICI Bank, the second largest weight in the Bank Nifty, closer to an all-time high, just 2-3% away. So the structure is positive. Banks have taken the lead, and banks being 34-35% of the Nifty, that creates a positive momentum even for the Nifty. So overall, the bias remains positive. Bit of volatility around here would be normal. 24,150, 200 now becomes a short-term support. And the next upside target would be 25,200.
Okay, point taken. So that's the view coming in on Nifty. It's actually moved into the red at the moment. There has been that sudden pressure again, which has got built up. So the day has been marked by those sudden, vertical slides that we have seen. And this is the second or the third one that we are witnessing. Bharti Airtel is one of those stocks which is putting pressure at the index level. Reliance, ITC again is giving up. ITC was holding up on account of that clarification coming in from CBIC, but no, it's given up now. So that stock too is under pressure at the moment. L&T, Tata Motors, they're all down and out. Dipan, what would you make of the market setup right now? Because if you look at the index, there is that sell on rally which is happening. There is, lack of that conviction buying in the markets. What should one do right now? Just stay, on the sidelines or start deploying in parts in the regions that you like?
Yeah, good afternoon and thank you for having me on your show. I think that it's better to just wait and watch, and selectively only one can deploy on corrective days. But one should expect that markets can be in this sideways to slightly declining trend for a few more months. And we had a nice upswing post Maharashtra elections, and then Trump rally also was there globally and in India. And fortunately now FIs also have become net buyers. So these are the three positive things which took the market up. But the real issue over here is high valuations and slowing down of growth. And unless those two are addressed, I wouldn't be completely confident that the market would have then entered a new phase of the bull market. So one needs to be a bit careful over here. And I think selectivity is the key, and trying to play safe in this market. I think that is a good strategy.
Okay, that's the strategy on the overall market. But Dipan, where's the bullish bias? And it clearly seems to be banks all the way. HDFC Bank finally participating on a daily basis, clocking in fresh highs.
Yeah, see, I think that investors are looking at banks because optically they are cheap in terms of price to earnings multiple as compared to their historical valuations. Also, they are attractively priced. But look, when I look at the numbers and look at the dynamics within the industry, I would think that at least the investors' endeavor should be to be neutral to underweight banks. And the reason for that is the high degree of competitiveness which has taken place within the industry. It's like a complete red ocean over there. And certain banks who create a lot of wealth, like the private sector banks like HDFC, Axis, ICICI, they are gradually losing their edge because of new generation banks which have come in. And PSU banks also have upped their game. They are also offering good tech platform, great service, and now they have the capital also to lend. So I sense that it's a sector where there's a lot of competition, and the kind of way the NPAs have moved up the last 2-3 quarters, that is a bit disappointing. So I think fresh allocation can be made into banks only if you have very, very low exposure to banks. But on the whole, I think one should be underweight the entire banking sector. And just because stock price has gone up does not mean that they can deliver solid long-term returns or create a great deal of wealth. So one should keep that in mind.
The choppiness continues. Right now, though, we are holding around the 24,550 odd mark for the Nifty futures. What's actually giving strength to the market? Once again, HDFC Bank, it's holding up a good 2% in trade. TCS as well is looking strong. SBI latching on to its green, and so is the case with an ICICI Bank, and barely for a Kotak. Not quite the case with autos, Bharti, Hero MotoCorp, Maruti Auto significantly under pressure, as is the case with the Trent, with an ITC, Adani Enterprises, and Reliance is well underperforming by good 1% as we speak right now. Still in conversation with Dipan Mehta and Naresh Mirani. Dipan, just before the break, you were highlighting your thoughts on banks, and you said that you're underweight banks, and just because the stock prices are moving up, that doesn't hold any merit for one to look at banks. What then is your bullish bias in the market right now?
No, as I said, our view is a bit cautious on the market, and therefore we just want to try and increase a little bit our cash levels. At correction, we'd like to get into some of the platform companies, maybe selectively into pharma, selectively into mid-cap IT. And I think for a long time, we have been underweight PSUs. So, defense PSUs, maybe even the PSU banks, we are underweight over there, although I'm negative on banking sector as a whole. But I think there could be a good trading opportunity or a medium-term investment opportunity in PSU banks as they can try and move up in terms of the kind of deep discount which they are trading at compared to the other private sector banks. So broadly, that's where we are focused on. And as I said, there could be a few odd companies here and there which have got a very unique business model. Those are the ones that we are focusing on right now.
Would you like to spell that out? When you say unique business models, exactly what sectors are you talking about if you don't wish to name the companies?
No, I'll name the companies, but you have to have a disclosure
Sure.
that we have investments or we may make investments in those companies and our views are biased. So, last couple of years, 2-3 years, very interesting IPOs have come of companies. They've traded for a year or so, and then the business models have evolved, and there is a lot of understanding of those businesses as well. So with usual disclosure, again, I would say that, like a company like BLS International, which is one of India's largest visa processing company. It's quite a unique business and great annuity revenues. And I mentioned platform companies which have got listed recently, like there is RateGain Technologies. There is also companies like India Mart Info, India Mart Intermec, Zaggle Prepaid. These are the interesting companies with very different type of business models where they could scale up very easily if the right kind of environment is there and management effort is there. Within the software group, particularly like companies like I would say Persistent Systems, KPIT. I know these are well-known names, but they're still consistently growing at a rate significantly higher than the industry. So obviously they're doing something different. And there's another company which we liked a lot, which a recent listing called Sagility, which is into again processing of claims for US companies. And its Indian counterpart, I would say, Indian peer group companies, MediAssist, that also is one of India's largest insurance claim processing company. So these are all businesses which have got kind of something different in them. They've got good competitive edge. I think that's where we are focusing on to find the next set of ideas and try and invest at the right valuation level. That's the challenge, right valuation level.
But yes, opportunities are galore, and Dipan pointed out quite a few names, right from a Sagility to a MediAssist to a Zaggle to a KPIT to a lot many other names as well that he pointed out, the likes of RateGain, etc. that he likes at this point of time. But let me welcome on board Shrikant Chauhan, who joins us on the show as well. Shrikant, a couple of these spaces are doing well today. A is of course defense on account of that DAC news. So those data patterns and Bharat Dynamics of the world have been doing well. Garden Reach, Cochin Shipyard. And a couple of these cable companies, case in point being, of course, KC International, which is, has a bit of a exposure to infrastructure and transmission, and Finilex Cables is doing well. What's your take on some of these names?
Yeah, good afternoon, everyone. I think, see, in that particular, all these stocks, if we just go through with few of them, then Case is doing really well. It is like whenever there is rally in the stock, prior to that, we see consolidation, and most of the time that consolidation manages to hold above the lowest of the previous swing, which is something clearly indicates that not only the technicals, but also fundamentally the company is very, very strong. And while looking at the overall setup of the stock, I am of the view that the stock is heading for at least 1500 in next maybe few weeks or months. So it will take some time, but it's a positional buy at current levels. I think the stock is having very good support close to 1050. So in case if there is any correction, then we should look for adding more close to 1050, 1060 levels. We also like phenolic scribbles, and there also we are seeing that some amount of buying interest is there after falling to the extreme levels from the highs of 1680 to almost 1100. But the rally which was there in the past was much stronger, and the correction, the sell-off that we saw from the highs was the corrective pattern. So again, I'm expecting strong bounce back or pullback to the recent fall, and the stock can again manages to move to the levels of 1500 or maybe 1550. So broadly, I'm of the view that the correction that we are seeing right now, or maybe the sell-off, or maybe the fall that we are seeing in stock, is nothing but corrective pattern to the previous rally that we saw in the past.
Point. Dipan, what about the PSU banking space? Because we were just going through the data this morning as to when, Bank Nifty is up almost 5% since November 21 lows. You have the PSU banking index, which is up almost 10%, and that comparative data will come up for you on the screen. Do you think this sort of outperformance from the PSU banking space will continue purely because they had taken a bigger knock as well? Dipan, the question is for you. Okay, I think we'll just toss that question to Naresh at the moment as well. Naresh, what within PSU banking names looks good to you?
So all the names have actually given a breakout today. So you have State Bank of India trying to break out above the 860 mark, not far away from the all-time high at 900, 910. Then you have Bank of Baroda, which went through all sort of volatility over the last 1 month. Gave a breakout post numbers, went to 265, did a low of 230, and now we are back to 260 levels. So that's the one. But I would continue to have a basket approach out here on the PSU bank. So something like PNB, Bank of India, which have corrected 30% from the top and are now reversing. So that's one segment. And then SBI itself. So SBI and a bunch of small cap PSU banking names still look interesting.
Okay, point taken. Dipan, let me toss that question to you. PSU banking space, which are the names that you like?
Yeah, I think if you have a little bit of appetite for risk, I was very impressed last 2-3 quarters, banks like Bank of Maharashtra, Central Bank of India, Punjab and Sindh Bank, some of the other tier 2 banks have reported very good numbers. And now their kind of growth dynamics, all the numbers, whether it is credit growth, NPA, all the other aspects, fee-based income, that is very close to some of the new generation private sector banks. But yet these banks are trading at a massive discount in terms of price to earnings and price to book. And I think that they are now in a position to steadily grow their balance sheet. They anyway have a very strong network of branches. Their CASA ratio also is very high, which provides them with low cost deposits to lend as well. And a lot of the constraints which are holding them back in terms of high provisioning required and adequate capital adequacy, I think those issues are well behind them. They have invested extensively in technology and improving their service levels, although not at the same level as private sector banks. But I think that there's definitely an opportunity in the PSU banks. But I mean, nonetheless, also, you could still look at SBI, and that also, I think, if you have it's got a good risk return profile, I would say, within the entire banking space.
Okay, let's just take stock of what else has been holding up. RBL has shot up quite nicely today. It's holding up a good 5%. There's Indian Bank, which is looking good by about a good 5.5% as well. And then, of course, there's HDFC Bank, which continues as a steady ship. From the tier 2 banks within the private lot, Naresh, what's looking good to trade?
So it's always been Federal Bank, which has clearly been the leader, continues to make new all-time highs even today. But the other names are now giving a very interesting signal in terms of bottoming out. So if you look at RBL Bank, it has corrected from 300 all the way down to 150 and bottomed out. You have Bandhan Bank, which is closer to the lows it made in March 2020. Then you have IDFC First Bank, which has corrected even after the recent recovery. It's still down 30-35% from the top. So basket of these private banks, which have corrected 30-35% from the top and reversing, could be interesting. And the very small one, which is DCB Bank, which has clearly given a reversal signal. So that is one more name in the whole basket. So you have a bunch of names out here, and all of them look interesting.
Point taken. Time now to take the closing trade ideas from our technical experts. Shrikant, you go first.
Yeah, I think see like this market is like showing a lot of broad-based activity in this market, and whenever there is a broad-based activity, we see a good amount of buying interest in those stocks which are not the part of index, and in that way, like Zomato, yes, it is entering into Sensex, but while looking at the setup of the market, I think it is on the verge of crossing its previous high of 300. At this level, it is consolidating, and the support levels are at around 275, 277. So with the same stop loss of 275, we should look for adding Zomato at current levels. We are expecting stock to move towards 300 and maximum 310. Apart from that, we also like Punjab National Bank, and here if we see the overall technical pattern of the stock, then it is much better, relatively better than other banks. In that, we are expecting stock to move towards at least 116, 117. Currently, it is at 110, and we can keep stop loss around 108.
Okay, that's the trade coming in on PNB. Naresh, what are your stock ideas?
So that would be a buy on ICICI Bank. We've seen the stock again testing that 1300, 1320 mark. Should be a short-term breakout in play, and post the breakout in HDFC Bank. Next one on the radar would be ICICI Bank to make a new all-time high.
Dipan, good to have you on the show. We'll let you go on that note. Thanks as always for your time.
If you like this video, then like, share and subscribe to ET Now.